Hello, happy Sunday. I am Lisa J. Stocks. Thank you for tuning in for this week's Stock Talk episode. It is March 1st, 2026. We have about 20 days left until the end of winter, and we are starting the last month of Q1. So, if we have any goals that we've been slow to get completed, we still have 1 month left to get this quarter going. All right, so guys, I'm going to kind of continue with my thought process and my show that I was doing the week before last. Sorry, I wasn't here last week. I haven't had an event to go to, but this is another concept or saying, expression, thing that I hear that I wanted to talk about this week. And that is the expression of only invest what you're willing to lose. And that's what we're going to be talking about today. So I totally understand where this concept comes from. It comes from a place of thinking about cryptocurrency and options and things that people do to make quick money. And that is not the atmosphere that I want to really focus on over here. We are long-term investors. And I want you to, if you've had this, if you heard this, I want you to realize that this does not apply to you if you are a long-term investor. It comes from environments where there is the potential of losing everything. And when it comes to my investing, that's not a possibility that I am allowing to go on in my investing journey, in my saving, any money that I am managing. And there are ways to mitigate the risk. And so we have to make strides to do that. And I definitely want to make sure that this is something that is clear as to why I never use this expression when it comes to what I share over here on my channel. Now, here's the thing. I want to make sure that a part of you is in the mindset of being a long-term investor and not just focus on trading, because we need to know that we're taking care of our older selves, that we're making plans for down the road. And so this is the mindset of someone planning for retirement, wanting to have stability, wanting to pass on something to the next generation. Even if it is just knowledge, that is something too, teaching your children how to be responsible with credit and know how to invest, know how to get your first job, sign up for that 401k, and be much more prosperous than potentially we were at that stage. So guidance is also a huge thing that we can also give to our families. So guys, thank you guys for tuning in. Thank you guys for chatting. Today, we're talking about why over here on my channel, we do not have the mindset of only invest what you're willing to lose, because we are striving to make money. We are not here with a gambling mindset when it comes to our investing. We are on track to build wealth. That is the goal. And so, my portfolio, there is obviously a potential for losses, but even with that on the table, you have to come up with a plan. It's never the goal, but you have to have the right mindset, do your research, and know what you're incorporating into your portfolio in order to mitigate those losses. I thought it was only trade options with that you're willing to lose attitude. I hear it in other spaces too, not just around options. And some people, I think, are fearful of investing as they are of options trading. So I thought that this is something that I wanted to touch on. I want to make sure that there is something that a lot of people, I'm not sure. I was never fearful as I think I have interactions with other people. When it comes to investing through my retirement plan, I've been doing that since I was a teenager through my employer. So it never seemed to be something that, you know, was so taboo. But for maybe for those that didn't have that built in, that they've always been contributing to 401k or 403b or something like that, and they have to go out and do it on their own through a Roth IRA, or if they do have something on Robinhood or Webull or something like that, they're intimidated or worried about losing their money. So I just want to talk about the ways and the type of investments and being on track so that you don't lose money. I'm not sure if this direction is the right way to go from what you're saying, Elevated, but whatever it is that might be holding you back, if this is something that you heard, today is the day that we're going to eliminate that, because we're going to dig a little bit into what the meaning is. I believe in focusing on good quality investments and not having that feeling of it's a gamble. If something is going into my portfolio and I do feel that it is speculative, I do truly feel like it's a gamble, it's up to me to make that decision on how to manage it in order to make sure that I'm not losing money. And so and that takes work, that takes responsibility, even with using a stop loss, which I'm going to talk about probably a couple of times today. You have to keep up with it, because your stop loss, even if you do mark it for good to cancel, that only lasts for 90 days before you're going to have to go in and update it again. So it lasts a certain amount of days and then it's going to drop off. So you have to be on top of trailing your stop loss in order to lock in those gains if you are in something that is trade status, something that you don't want to be stuck diamond handing in your portfolio. So, all right. Yes. So I am admitting, and I think I'm never going to say that investing does not come with risk. Investing does not require you to have patience and put in some work, depending on what you're investing into. But what I want you to be able to do by being here, being a part of this community, is get into a place where you are knowing how to do your best, make strides to be able to not be fearful and panic sell, get into good quality investments so that you're eliminating as much as possible that possibility of you losing money. And there are ways to do that. Yes, I do have things in my portfolio. I have a couple of things that need to recover, like a Target or a Disney. But they are companies that you've heard of. They are companies that I'm not stressed about the position size and the pullback that I've seen, or the lack of growth that I've seen in those investments. If I wanted to cut them today, I could, and then move them over to something else. But the majority of my portfolio are things that pay dividends. No, I don't have huge dividend investments, because that's not really my focus, but pay a quarterly dividend, steadily increase, and I'm seeing that growth in my portfolio. Yes, there are going to be huge things that impact the stock market as a whole, like we've been seeing with this administration, like potentially, there are going to be tensions right now with what happened this weekend, with, potential of who knows what, as far as, those war threats and political things going on. So on top of things going on in court regarding the tariffs, so things like that are going to make the stock market move. And when I say don't be afraid, don't think that you're getting yourself on track for a total loss, you do have to be ready for fluctuations when it comes to your portfolio. And that's why I always say investing is not a one size fit all thing. As you get older, as you're getting closer to certain goals that you're working towards, you need to get yourself into a preservation stage as far as what you're invested into. As far as those things like, that might take years to recover. Bitcoin, for example, don't be heavily weighted into things like that when you're in that stage when you're 75 years old and you're drawing on your account on a regular basis. So, how do I think the defensive stocks will react after this past weekend? I am not sure. I was not really reading up on that. I did just touch on that. So it's not a huge concern to me because I have more broad, diversified investments in my portfolio. I don't trade things that are like that. So if you have, you know, more of those specific companies that are going to touch on energy and defense and things like that, then you need to be more in tune with it. I cannot say that it's a huge concern for me because I'm in mostly investments that are tech focused. And so not they will be impacted, but not in the same way as if I was holding individual stocks or sector specific ETFs around that. You mentioned this weekend's events. Do you have any? Um, Taking a look at the chat, I will try to touch on your questions. So, guys, let me know what you think about today's topic. Okay. So, all right. So, back to what I was saying about investments. I want everyone to be comfortable with investing and not let the opportunity pass them by. And with that, you have to know what level of work you're willing to do. It is fine to just be invested into the S&P 500, a good the top 500 companies in the US. It could be a start and finish for someone that doesn't want to put in additional work on researching individual stocks, want to watch their portfolio very closely, want to put on those stop losses like I'm talking about, and then be mindful of, it's coming up on how many days do I need to go and update it again and again. So there are many different ways to go about your investing. So you have to find what fits for you. It's not a one size fit all thing when it comes to your age, your risk tolerance, your goals, when you got started investing, if you're feeling behind, there's so many things that are going to impact the way that you invest. And so if you're not wanting to put in that level of work and watch things like a hawk and take on that responsibility of potentially, your investments being sold in less than a year, then those may not be things that you want to incorporate into your portfolio. If you're going to be stressed about the volatility and not want to put in the work, then don't buy it. Stick to something that has proven itself that's going to have that steady growth that is more, I want to say, a one size fit all thing. I don't want to say beginner friendly, but something that is definitely gonna not cause you stress and be easy for you to navigate and manage, but at the same time, like we had a back-to-back 2 years of the S&P up about 25%. 2025 wasn't as good. There are going to be years where we're getting a more average rate of return of a 10 or 11%. But if you let the last 3 years pass you by with, 25, 25, and say about 18, think about what that could have done for your money as opposed to sitting and waiting and worrying. And even if there is a pullback, this is the top 500 companies. It's going to recover. I'm not saying it's going to recover in 1 year if there is a pullback, but that's where the patience comes in. And that's where you have to incorporate things that you have a true conviction in so that you can manage to get through these tough times. Okay, let me go back to Vincent's comment. All right, so Vincent Pascal is making a comment here saying, during senior year of high school, we did a stock market project where we invested a certain amount of money in whatever stocks we wanted and monitored them over the semester. Do you remember what you were invested into, Vincent? If you were investing real money, what would it have turned into? I did a similar project when I was in college. And yeah, I didn't take it seriously, and I wish I did. I wish I did, because even if I just applied some of the concepts and thoughts that I should have been drawing from the class to my own personal life as far as investing to my 401k, then it could have helped me sooner than where I've been able to get things turned around to. But yeah, I have my daughter, it was something at a local college. She did something kind of similar. She's in high school still. But she was a part of a program where she was able to gain some financial literacy. One of her teachers actually tapped her to go and be a part of this program at a local university. Which she went and did it, and they actually had a little stipend for being a part of the program, but she said she didn't learn anything new. So I guess I had already taught her most of the things along the way, and we have been looking at her own real portfolio that we've been building over the last several years over at Fidelity. Okay. I'm taking a look at the chat. Some investments in sin stocks and some investments in corporate social responsibility. Not sure what you were referring there, Daryl. Let me take a look. Sorry, guys, I'm a little distracted. It's great that you started teaching your daughter early. Well, not, I'm glad she knows what she knows. But it's even better. I thank you for the compliment. But what really matters is taking the knowledge and applying that. And I hope that she goes forward in life and really takes the teachings and insights that I try to give her and really apply them. Because what I want her to do is to create a lifestyle where saving and investing is a priority, and not just, create an atmosphere or a budget in her life where all the money is going to the car and rent and all of those, eating out and all of those things, and not leaving yourself, not prioritizing saving and investing. Okay, let me take a look at Buzz's comments. I think you've been commenting a few times on today's topic. I think we first start our journey in investing. It feels like gambling. We think that it's all about picking the next Nvidia and Google. Okay. Yeah, so I think you're getting the message that I'm trying to get across here, where when you first get started and you see those fluctuations and you're not that deep in profit when it comes to your portfolio, yeah, you might feel like it's going down as though it's a gamble, but it's a matter of what you are invested into and knowing the potential of it. And it's so easy today. It is so easy. You don't have to choose. You don't have to choose individual stocks of Nvidia, Google, Apple, this, Tesla. You don't have to sit here and build all those individual stocks. You can pick top funds, check on the performance, check on the expense ratio. I'm a stickler about that around here. And then find something that fits what your goals are and your risk tolerance and all those things, and just focus on building into that. Or you can choose maybe 3 different funds and focus on building those out. And when I say build, I mean whatever amount that you have, even if you are on a smaller budget, stay consistent with it for years, a couple of years, and then give me an update. I did a stretch of 3 years and I think 4 months of $10 a day into VTI. When I started doing that, I didn't have an end date as to when I was going to stop. My first initial commitment was to do it for 10 weeks, and then I kept on going with it. But I think a lot of people, and I'm glad that I did that. And if you haven't watched that video or you haven't ever seen me on that particular investing journey, please check that out if that can bring you inspiration or, just show you what that amount of money could do. Even if you only have half of that, if you could do $5 a day, just to see what it can turn into. Use the investment calculator. Just don't think that anything has to hold you back from investing and really having this opportunity and seeing the growth when it comes to your portfolio. Okay. Oh, hello there. Thank you for tuning in. I'm a champion. Thank you so much. I have heard that you should invest more than your monthly car payment. Okay, that's something I don't think I've ever heard that tip specifically. I haven't had a car payment in a while, and the last car payment that I had, guys, it was like $135, and I put down a substantial amount of money in order to have that low of a car payment. And then basically I could have bought the car outright, but I said I didn't want to put all of the money into the car. And then my car payment was 135, and it was only for, I would say, maybe a 3-year time frame. So that was my limit. I know car is a substantial and purchase, one of our largest that we have to make. And we have to make it several times throughout our lifetimes. So with that, what I was trying to do, my goal in getting the car was, and it will be continuing going forward, I would like to either buy my vehicle outright, or I would say 2 to 3 years, hopefully 2 years max, if I have to have a car payment. And then after that stretch of time, I want it to be a nice big, I would want to say a decade before I have to see a car payment again. So that's how I go about it. That is my plan. And yes, I'm just like you, Buzz. I hate car payments. I hate car payments. I haven't had one for a while now, but in the future, it may happen again. Because my car right now, I think I'm over 115,000 miles. Car's not giving me any problems, but it is what it is. I'm not saying that that's going to last me forever. The last car I had, I think it was an '02 prior to this one. And yeah, I had to get rid of it because of, I felt like it was at the point where I was putting too much money into it. It was rusting. It was giving issues. I was actually getting fearful. It was a Ford Escape, and it had these hinges that came from the top of the roof and held the back window. and I was getting rust issues like all over the car, including those. And I just was driving at my on my corporate campus at my job one day, and I just had a vision of my back window falling off and just embarrassing me on this particular hill that I would have to drive up to go to work. And I said, yeah, I need to get this taken care of. This car, I'm not putting more money into lights and rust and this and the mirror. And yeah, it got to the point. But I got a good couple of years out of it. And I had bought it at the auction for like $4,000. So it definitely served me well, even though it was yellow and people made jokes about me. Okay, so let me see. Okay. Attending an auto show is a great way to shop for and research cars without having to worry about a salesperson hovering over you. Okay. Yeah. I often think about like analogies of things that that we put research in and we have an understanding of. And I was thinking about cars the other day because when I was looking for my car, I was working in a town. It's only like 25 minutes away from my house, but with traffic, it was going to be substantial, further than I wanted to go. But anyways, when you go to look for a car, I'm no car, I don't know too much about cars, but overall, I was trying to make a plan on what my budget was, what the mileage, what gas mileage I was looking for. I don't mind. I wanted something that didn't need that special oil and have the $100 oil change. I didn't need a big truck because obviously that takes more quarts of oil. That's not going to be as good when it comes to the gas mileage and things like that. So I had an idea. I had a few, like you go into a website or something, and I had a few details that I can put in, and I'm talking about that as like an example because when it comes to our finances, these are the type of things that I hope I'm showing my daughter. And I'm always trying to relate that we know we have a standard on certain things, even a television or something like that, or some equipment that you might want to buy, or a gaming system, whatever it is, whatever your vice is, something that you're shopping for, you probably have an idea of the price, the features, and things like that. And so I'm talking about this because I want us to start to think about our investments, the way that we're saving and investing in the same way, that you have a standard, you know what you're looking for, you have expectations, you know the performance that you want to be achieving when it comes to your portfolio. Throughout life, we've probably done it on so many different things, but if you're not there yet, I'm encouraging to start that I want you to start more and more doing those things when it comes to your finances and, building wealth, asking those questions, having standards, figuring these things out so that you can be, on track to know that all of my portfolios, my retirement account, everything is meeting my standard. And you can't do that if you don't have a standard, if you don't have a bar, if you are not asking the questions. But if you don't, you have to gain knowledge in order to know what questions to ask. So maintenance fees, similar to expense ratios, the maintenance fees of the car and me with my expense ratios. Yes, I guess I was doing that same thing. I don't want to have to buy high grade gas and get that fancy oil change and know anything about $900 for brakes or something like that. I want to be in a more basic vehicle so I don't have to constantly be putting so much into it. A used compact pickup and reliable low mileage for an age was my first car. It paid for itself and helped my parents move. Okay. Someone was on here a few weeks ago. I think Anthony or someone was on the panel with me on this particular day. and the person was asking me, like, what are my thoughts about leasing a car? And I'm like, I'm not about leasing a car. If my circumstances that they wouldn't suit me. I want to pay off my car in full, have it like I was describing already, have it for years to come. And then after that, if it is something that I can even trade in, sell on my own, even if it's just a little bit of money, it's something. Or if I can give it to a family member or something like that, or just use it for other uses with someone in the family, be able to get some use out of it for a little bit longer. That would be more worth it to me than to 3 years of paying, and then again have to go get a new lease and start all over, and you're paying and you never get a break, or you never see a chance for an opportunity to be able to build your reserves back up for the next time around when you need a new car. Okay, I'm missing some comments. All right. Okay, thank you, Joe, for the super chat. I appreciate that. If you don't mind, can you also please drop a membership milestone if you're still here? Let me see. I don't know what's going on with my StreamYard. Okay, so guys, thank you guys for chatting. You're helping me to Vincent. Thank you, Vincent. Vincent has been a channel member for the last 14 months, and Joe has been a channel member for 18 months. Guys, I do have channel membership. I do appreciate the support of the channel, but I am also here to support my members through having members-only live streams, prioritizing their questions, comments, but they can always reach out and we can have smaller group discussions and things like that. So in case you didn't know, you can support the channel in that way. Okay, guys, I'm sorry if I missed any questions or comments. I see something about a BMW. My next car will be a BMW convertible. It will be a pricey buy. Okay, Dr. Ninja. I hope that's going to be paid in full or quickly. But I know you are a frugal person, so I know you have a plan on how you're going to get that done. And you've worked very hard, and I know you will make sure that you're fitting it into your budget. Okay. You guys are chatting about the car. Got to give Joe a thank you video. Oh, I'm sorry. I was looking at my media assets. Okay. Listen, station break for Joe. Shout out to Joe. Shout out to a brother of a certain age. Of course, shout out to Vincent. And so, quick station break.
Thank you so much. We do greatly appreciate it.
Whoops, guys. I hit the ending song there by accident, but I am back. Thank you guys for supporting the channel. You got to add that. Oh gosh. Okay. Anthony, you seem like you're off to some not stock talk over there. All right. Okay. Let me go down here. Got to stay focused on building assets. Learn from my mistakes and keep going in 2026. Year of the builders to buy both crypto and stocks. Okay. Purple Rain, thank you for that second super chat of the day. Thank you for tuning in and supporting the channel. And thank you guys so much for being today's sponsors. Okay. So let's see. Not stock talk. So guys, just to mention, Joe, who has a channel that shares about health and wellness, and her weight loss journey and so many different things. She also recently got monetized and has memberships over there. If you've never checked her out before, this is her, Thrive and Glow with Gel. And thank you again, Vincent, for sending that chat. Okay, so now let's talk a little bit about those investments. I touched on the S&P 500. Are there any category of investments? And remember, today's topic is putting the thought process of only invest what you're willing to lose out of your mind. Are there any investments that you guys, whether it's a funds or individual stock, what are you holding in your portfolio right now that that you would never have that thought of I could lose my investment? You're worried about your investment. What investments are you holding that you hold and can always sleep well at night knowing that you have it in your portfolio? You have to be odd to be number one. Oh, one of my favorite little quotes popped up in the night bot. With oil in the news, what are your thoughts on oil companies? We should look into that. Are they going to be on sale soon? So Anthony, I touched on that earlier, that I don't hold individual companies like that. And so I am up on the news. Even my youngest daughter was talking to me last night. She's actually the one who reported to me about some of the things that were going on as far as potential of war and someone passing. And so the stock market as a whole, I'm just always ready for the volatility, but I don't find myself to be overly concerned because I'm not directly invested into those particular sectors or stocks. So I didn't really do any research or had a plan to chat about that specifically. Okay. Should I hire a financial advisors? Relatives say ETFs should be safe. I don't know. CC. Now, I am not a financial advisor. I am not a fiduciary. I am just a regular person who has put a lot of time and effort and thought and made huge improvements when it comes to my own personal finances. That was a little longer than it needed to be. But in my opinion, Cece, you do not need to hire a financial advisor. I think that you can do this. I don't know all the specifics of what you have going on, but I even had someone recently in my comments watching some of my Fidelity focused mutual fund videos, FXAIX, FSPGX. I have a few that I hold, and I give updates, and I talk about them in my videos. And they shared with me that at Fidelity, the company that I use, my preferred broker for myself, my daughter, my business, that the financial advisors over there were trying to get her into something with a 0.7% expense ratio. And in looking at my video and looking at the detail and the performance, she could see that what I was doing on my own through Fidelity at a 0.015, 0.035%, for example. So that would be equivalent to, say, $1.50 or $3 on 10,000. They were trying to get her connected with a financial advisor where she would be paying $70. So I think that you can do it on your own. I think it takes research. There are resources at these brokerage companies of people that you can talk to. And if the one that you're at doesn't have, you have to be able to filter through and know if the broker that you're with has choices in line with your goals. I wind up having to leave empowerment and move some money that was there over to Fidelity because I thought that that was a better fit for me. And I really could not find any low cost, good quality, the funds in line with what I was trying to achieve. So I say all that to say that I do not think you need to pay a financial advisor, hire a financial advisor. You have to realize that having an advisor putting you into these portfolios that potentially you could manage on your own and get the same performance, I don't see the point in it, and I will never do it. I will never be paying anyone a 0.5%, 1%, anything like that when I know what I've been able to achieve in managing my money on my own. And I hope that you could, do some research and do the same and realize that 1% is a lot, guys. 1% is way too much of your portfolio to be losing, or 0.5%, 0.7, like I was describing the person in my comments shared. Those are high percentages to be losing out on your portfolio to get quote unquote professional advice from a financial manager that may not even have your best interests in mind and may have you in, I find them to often be putting you in very conservative funds. But Cece, like I'm saying this high level. I don't know your age. I don't know how much you already have invested, but I think you could do it yourself. ETFs should be safe and fine. It's just a matter of choosing the right ones. And is there, let me see. Okay. All right. So guys, I'm gonna continue looking at the chat. All right. So Cece said, I sold my home and willing to invest the money. It's so confusing for you. You can share a little bit more if you want as to what part of it is confusing. What investments have you had bad investments go bad in the past? Is there any particular fund, ETF that you're thinking about going with? Okay. All right, I'm not seeing any questions really that I missed. Let me go back down. Okay. And thank you for modding in the chat, Joe. I don't monitor the stock market daily. What do you recommend for those that don't watch daily? Well, Miss Frugal, thank you for being here. And also being a channel member. So, Ms. Frugal, if it depends on what you're invested into. There are plenty of things in my portfolio that don't need to be monitored and watched every day. And that's what you have to know what your level of work and interests are. If I'm investing into the S&P, if I'm investing, I don't need to check my Google or Apple stocks, individual companies. I don't need to check them every day. I know that I intend to hold them for the long term. My ETFs and mutual funds, I don't need to check them every day. They're going to fluctuate. I just need to, I can either make an automated investment schedule and just continue to build in that way, or I can just go in and do my investments daily, weekly, however I want to go about it. But I think a lot of us need to just put that out of our head. If we're not trading, if we're not, trying to do something very specific, it's okay not to look at your portfolio every day. I want, as an investor, as someone building for retirement, I think, twice a quarter at a minimum, you should be looking at it. I want you to have standards for yourself. I want you to compare it to, what is going on. Like I was doing a live stream recently, a couple weeks ago, and I shared a certain portfolio and what my growth was. I think it was over maybe a 14-month time span. And I shared the percentage. And someone in the chat said, my portfolio is only up 14% in that time span. And, I said to them, okay, I shared my number, which was, I think, 20 something percent on this particular investment. And then they said they were only up 14 or 15. And I said, just by you saying that, just by us having this conversation, now I can see that you're aware, even if you don't look at it every day. As of right now, you know what the current status is in the same time frame that I'm sharing. And so now you can go and do some research, see what you can adjust in order to make improvement, so that if the bar is set too low for you in there, you can do something to change it. And so I don't want everyone to feel like you have to be a trader. And, if you work 9 to 5, 8 to 4, whatever, 3 to 7, whatever shift you're working, you might need sleep. You might not have time. You might have kids and obligations. And, a lot of times there's no time to be looking at the charts and looking at your portfolio every day. Don't think that that's what investing has to be. But I want you to pay attention, be mindful, and at times, be in tune with the fees and the performance so that you can make improvements. But definitely don't feel like it has to be an everyday thing. Okay. So guys, thank you guys so much for getting me to my super chat goal of 5 for today. So let me check on the likes also. I only see 17 likes. Can you guys make sure to get the likes up? And I think I will be gifting memberships today in a couple of minutes. But I appreciate the support. I appreciate y'all chatting. I check it a couple times a month. Yeah, I think that should be plenty. I don't want you to just look at it. I talked to someone recently, and they have such disdain for their portfolio. They just talk about it and they say it's just sitting there. It's just sitting there. And they just sound so disgusted with it. As long as you're looking at it and actually, okay, happy with the performance, are aware of anything that might need to get adjusted, then that's fine to look at it a couple of times a month, in my opinion. There are certain types of you probably, from what I know about you, Karen, I think you have a portfolio that's built for that is not something that you need to go in and make sure that you're not trying to trail gains and lock in gains and change stop losses and do all these things. You're a regular long-term investor. So I want you to just have your eyes open to anything that might need to be rebalanced or changed. But overall, you should be, good with that. But I've seen you do a couple of finance related videos, and you definitely have knowledge to have your eyes open to anything that could use improvement. Okay. All right. So Fast Eddie, thank you for tuning in. Thank you guys for hitting that thumbs up. I'm not sure. I think I have to close it to see if I can get an updated. Make sure I'm in an update so I can see how many likes I actually have. Okay, we got up to 20. I was going to put on the screen if I can get 75 likes today that I would gift memberships. But I guess I have to do that from the start of the hour. I did that on Super Bowl Sunday. I asked for 60 likes because it was the 60th Super Bowl, and we were able to do it. But I had it on the screen. I guess if I don't say it all day long. Let's see. What is Nora saying? I missed it. How do you think Monday will open? You let us know your thoughts on that, Nora. I think it's gonna be red. I think it's gonna be red, you know? But I think things are gonna turn around soon enough. Definitely Netflix. I had given a video where I touched on Netflix. I think that was on Thursday. And now they definitely turned around after they got past, or were passed on acquiring Warner Brothers. So that's turning around with that stock. And yeah, Nvidia it was down after earnings, after spectacular earnings. Nvidia was down, but I think in no time, these pullbacks will be on track. And so, I'm one to I do a mix. I try to stay consistent with my investing, but also buy the dip. So I don't mind. I don't mind some red days for me to be able to go heavier. I know Joe shared that she picked up 2 shares of Nvidia for her long-term portfolio while it was down. And so, what did Eddie say? Oh, Eddie says it's going to be very, very red. Yeah. Volatile for sure. Yes. So, guys, what are your thoughts on this Netflix deal falling through? Were you at all? Did you want it to go through? Were you at all disappointed with them going with the other offer, or were you ready for Netflix to have a chance to get back on track after what they just did so much? I just, as soon as with the stock split and then that trying to buy Warner Brothers, it was just so close together. It just had my position, which is small, just a mess. But it never stressed me out. Never stressed me out at all. If the market drops 10%, are you going to put some of your cash in heavy this week, Lisa? And chat, Fast Eddie wants to know, if the market drops 10%, are we going heavy this week? Do we have it in our budgets to go heavy? I have some money that I've been dollar cost averaging into my SPMO, FSPGX. I'm doing my challenge right now into SMH. I've also been working on building up my AMD and Microsoft. So I think that's like 5 things that I named. So yes, if there is a dip on the positions that I'm already working in, I will be allocating more. Tesla's on sale. Tesla is Stressla. Yeah. Tesla is a volatile one when it comes to my portfolio, but I've been used to that. It's been years of looking at it now, and when I'm thinking it's a long-term hold for me, and they are having some struggle related to, I think they're actually getting sued related to some things that they need to disclose regarding their autonomous vehicles, but they're trying to branch out at lots of different places in Texas specifically. I saw like 6 different locations in Texas, different cities in Texas, but they're a company that I think once they get it together, who knows it could be like the Jetsons in the future with the freaking robots in the people's houses, folding their laundry and doing all of the things. So if I'm able to hold until then, my position could be looking lovely, but it's down right now. But yeah, at times, both my daughter's position and mine have been like as high as 140% up on Tesla. So, and my average as compared to what the stock price is, it shows me that was one that I really must have went in a little heavier on one of those big pullbacks, because my average does not seem like it could be in line with the time frame that I've been investing into it. So Fast Eddie is sharing that you bought a car and paid cash and with cash and trade in, and you got the car outright. I love it. Love it. That's what I'm talking about. That's the way I want to move going forward. I do not want to have a car payment. I don't want to particularly have a very new car at all, because with that, it's not just the car payment, it's the car insurance too. And while, I usually have pretty good insurance levels, but when your car is, when you're making payments, you have to have full coverage, and you're a little bit more limited there as to what you can do. Yes, what did I click on? Yes, Eddie, that is great. Thanks for sharing that. Everyone is saying yay, Eddie. Okay. Lisa, I don't think my comments are coming through. Yes, Rod, your comments are coming through. I see you here. There is no issue with you investing with Rod. You are here. You are a mod, and I see you. I'm sorry if I missed any of your questions or comments. Let me look back and see if I did miss anything from you, Rod, in particular. If you did share something that you want me to, I do. SHLD is a great ETF to have right now. It will be green tomorrow. Your prediction. I don't know what SHLD is. Let's see. Let me take a quick look. SHLD. Oh, Global Defensive Tech. Okay. Let's see. Let me move this shrink. Got to stay in frame when I do this vertical. All right. So the ETF that Rod was mentioning is the Global X Defense Tech ETF. It is up 68% year to date. No, not year to date, over the last year. Guys, if I say that in my videos, please excuse me, because it's the beginning of the year, and that happens to me all the time at the beginning of the year. I say year to date instead of over the last year, but please realize what I mean. Yep, I'm not familiar with it. I don't know what the expense ratio is and all those good things. But for those of you that were talking about defensive stocks or defensive investments, that would be one to take a look at if you're interested. Like number 21, thank you. Lisa, can I ask how tall you are? Why, Eddie? Why, Eddie? I don't have a P.O. box, so y'all can't send me gifts. But I am 5'4.5". That's it. That is it. I'm just borderline outside of petite. I am average. Lisa, I believe is you're trying to. No, Joe, I thought you were like 5'3", and I was like, I'm 5. I met Joe before in person. I'm just a tad bit taller than Joe. Joe is like 5'3". I have a little bit of height on her. Okay, this is off track. This is not stock talk, but Eddie, let me know if you want to have a members only live stream or chat while you still have your gifted membership. But I have my next 2 lives already posted. I'm going to be live with Marlene on Friday afternoon, midday at 12:15 Eastern Standard Time. And next Sunday is already posted. I'm going to be having a special guest. So go put your notification bell on for that. And I have a premiere that is going to be coming out right now. And we're going to be redirected to that in a minute. I really didn't get through a lot of my topic. I'm thinking about moving my my premiere. But let me just take a look, guys. Let me know if you have any other questions or comments. It's Eddie's fault, but you were over there trying to answer Eddie's question. So you have a correlation between being good at budgeting and investing and being very petite, Eddie? Is that what you're trying to tell me? Okay. But like I said, I am not petite. I am average. I'm just borderline in the average height. Okay. I'm being a good moderator. 100%, Joe. Awesome moderator. Awesome friend. Awesome supporter. I have got to do something. There seems to be something wrong with my Nightbot because we're getting this many times today. Unless someone is just happens to keep using the same word that I have connected to that. Oh, I think I scheduled my premiere incorrectly. It looks like it came out an hour ago. So must have done something incorrectly there. Okay. All right. So guys, drop me any comments that you have. I'm going to talk a little bit about some ETFs, trying to stick on back to my topic of not using this expression of only invest what you're willing to lose. Make a plan on being in something that is in line with your goals, something that is going to have steady growth, that you're not ever going to have this concern that if I was to hold this, it may need time to recover, but if I hold this for the next 20, 30 years, at the end of the road, I will be substantially better up significantly from where I started. That is what I want you. Those are the type of investments that I want in your portfolio. Will you be hosting, participating another community live with Sledge and friends? Actually, my guests next week, I would like to. Anytime that Sledge reaches out, I'm always there. Sometimes they start at 7, which is a little tight for me. But if I can jump on at 8 o'clock, I will always connect with the community. But next Sunday, Darius Jamal will be here with me, and he is very involved with the community. So I'm always ready to connect with the community members. There's a few individual people that I want to connect with, but yeah, always ready to be on a full panel with them. But no plans or dates that I've been invited to. We're having fun. You love it? Okay. All right. So I'm going to just touch on a few ETFs, like I said. So guys, can you drop in the chat? Let me know what is your go-to investment for S&P 500 exposure. If you've been here before, you know my two are VOO and FXAIX. Are there any others that anyone wants to share in the chat? So this is a foundational investment, a backbone, low cost, diversification, reliability. This is something that when I say is a go-to, something that anyone should be comfortable with. This is not, no willing to lose money. This is wealth building, steady passive way, quarterly dividends coming in, low expense ratios. There are some out there with higher expense ratios, but VCI, that's a total stock market. Definitely. It's an either or. You don't need to do both. I happen to have both, but you don't need to because there's, I would say, about 86 to 88% overlap. So you can choose one. You can't fractionally buy VOO. Okay. I think you're at Schwab. This is why I love Fidelity. Fidelity, you can buy $1 of VOO and build from there. There have been times when I've done small amounts, $2.50, $5 with my daughter in her portfolio. Okay. Believe it or not, Lisa, I have VOO, but SPY is taking over in my portfolio. SFY, not SPY, SFY. I don't know what SFY is. Oh, the SoFi. Yeah, I think that was a good one. I think it had a high expense ratio, but they were waiving it or something. So I think I had watched your video and said, as long as they don't put it back on, it should be okay. Okay. So SPYM used to be ticker SPLG. That's a good one too. Yep. It has an expense ratio of 0.02%. So yes, I definitely give that one a thumbs up. And you're also sharing SCHD. All right. So dividend growth. So someone just shared, Mula just shared SCHD. So do you guys have any dividend focused investments in your portfolio? The ones that make you feel comfortable, you're never going to be looking at your portfolio with any thought of a loss. Recovery, yes. A loss, never. So share some of those in the chat. I have some in my portfolio, like not an ETF, but Main Street Capital has been one that I've been holding for a few years that has not disappointed. I also have Realty Income, which has not been too thrilling as far as the growth, but steady dividends. I have SCHD in my portfolio also. So guys, any dividend focused investments that, again, not gambling, that you guys want to share? All right, so let me check out Joe's comment. I ended up getting 5 UTMAs for each of my grandkids and building them all into FXAIX. Okay, are you going to mix anything else in there with that, Joe? Because the kids, I have nothing. I love FXAIX, but if I could do for more growth potential, I think that maybe we can increase mix in a different position for additional growth, but something very safe and stable, because I know you're probably just like me, especially when it comes to managing the kids' portfolio, but something that can give them growth for the long term. Okay. Yes, Joe is on the ball. FDVV, quarterly dividend, and GPIQ. I'm not familiar with GPIQ. When I looked at FDVV and I just haven't wanted to go with it at Fidelity. The performance and just wasn't in line with it. No, Joe, no VOO, because that's exactly the same thing. That would just be mutual fund and ETF form of the same thing. Maybe something like a VUG, or I'll send you a message. Or maybe the mutual fund growth fund that I'm in at Fidelity is FSPGX. So that would be similar to VUG. But yeah, something a little more concentrated, because I feel like the kids have a long stretch of time. I don't know all the grandkids' ages. I think you did tell me once before, but something that can give them more growth potential for the long run. All right, so we shared a few. Maybe I should put them in. FDVV. I'm going to take a look at the 2 funds that Rod was sharing. Comparison tool. And QPIQ. Goldman Sachs NASDAQ. Let's put the Lisa, will you be attending InvestFest this year? Okay. No, I've never been to InvestFest, and I would love to go. I've only been to FinCon and Vid Summit. As far as content creation or financial conferences, but I would love to go to InvestFest. I haven't made it yet. Yes, so is that a Vanguard ETF? VFIAX. Yes. I know Trudy and some others do that are at Vanguard. Okay, the community is a group of YouTube creators drawing a lot from the credit card points and mile space. Was someone asking the question who I was talking about with the community? Thank you for explaining, Vincent. Okay, so I put on the chart here. Let's see, let me go down. I didn't plan on doing screen sharing today. Oh, I don't even have my screen ready to share. But I put in a few dividend ETFs over here to take a look at. Let me put this up. I know it will be very hard for you guys to see on this vertical, but okay. So FDVV is a Fidelity. It's not overview. Fidelity High Dividend ETF. It has an expense ratio of 0.15% and a dividend yield of 2.77. And the Goldman Sachs NASDAQ 100 Premium Income ETF, I guess, very long name there, has an expense ratio of 0.29%, has a dividend yield of 10.10%. So that's a high dividend fund. And I put in here SCHD that has an expense ratio of 0.06% and a 3.3% dividend yield. Just taking a quick look, and let's take a look at the performance. Let's put it on the 5-year because I am a long-term investor. So out of those funds, FDVV has the highest performance at about 106 or 107%. And then GPIQ is up about 70%. But you're not going to get that high dividend and a high growth, most likely. So, yes. Thanks for sharing those, Rod. All right. So one or two more areas. Do you guys have any growth ETFs or sector-specific ETFs that you're holding and that give you that confidence of this will continue? Not a gamble, something that I can always be willing to hold for the long term. For me, I would say my go-to right now is SMH. I've been really building up into that one. So that is a semiconductor ETF. And the video, I thought the video was coming out at 4 o'clock, but it's out already. So guys, check it out. That video, it's specific to giving the weighting on ETFs heavily weighted into Nvidia, because it seems like my community loves ETFs more than having to deal with those individual stocks. But whether it's, Nvidia, Micron, Taiwan Semi, all those big names that give you exposure to AI, semiconductors, just technology as a whole. In today's video, you'll get a little bit of an overview of those, but I was really trying to highlight the ones that will give you highest exposure to Nvidia. Okay, so you guys are sharing some growth and sector-specific ETFs. So SCHG, yes, that is a good one. QQQM and VUG, yeah. So SCHG and VUG are pretty much this. Very similar, both growth funds, just different brokers. And so I always like to highlight that too, guys. Just because you're with Schwab, try to see what you can do to stick with the funds. If there is any different fees or anything associated with using a fund from a different brokerage company at your particular broker. So like if you're using a Vanguard fund over at Schwab or something like that, sometimes there are additional fees. So be mindful of that and just take a look and see if there is anything that is actually equal or very comparable that you can do there. And one thing with me, I was kind of slow to do is be willing to, if it's a fund that, from say a previous employer or something like that, do it. Be mindful of making sure to make the steps to do it in the correct way so as not to incur yourself any fees, or make sure that you open a new IRA, transfer it from one directly into the other, that you're not taking any money from it or causing any taxable event. But be willing to change your brokerage company if it's not in line with your goals and your needs and the flexibility that you may want as far as buying fractional shares, the type of funds that they have available, the fees, all those, anything. So I was slow to do it because I really didn't want to have to move, over a six-figure account, but I had to do it because I just could not find the things that were in line with my goals at that particular brokerage company. But thank you guys for sharing. So we have MGK, which is Vanguard's Mega Cap Growth Index Fund. Okay, I don't think I've ever touched on that one in any of my videos. Don't know if it has one of those higher expense ratios, but I will take a look at it for a quick second. But as far as what Rod is sharing, I don't have QQQM in my portfolio, but yeah, I always encourage you to make sure to go to that as opposed to QQQ, because it's going to give you that good concentrated tech exposure, but with that slightly lower expense ratio, 0.15%. And then VUG and SCHG, like I said, those are two very similar to my FSPGX, which is what I'm doing for growth in my account at Fidelity. But MGK. Vanguard Mega Cap. Let's see. Okay, so that has an expense ratio of 0.05% and a very low dividend at 0.38%. But let's take a look at the performance. Okay, over the last 5 years, it's up about 95%. Okay. So yeah, reasonable growth choice, it seems. Let's see. Oh, I didn't even see the 1910 MG. I don't know what I should call you. It's a little bit of a tongue twister there, but thank you for sharing that expense ratio. Brown, you've been watching me since 2024. Thank you. How did you discover my channel? And what were you questioning here with the Lisa and the one question mark? All right. Okay, so one more area. I didn't realize I had this down. Does anybody have any momentum or other type of funds that you want to share? For me, in that category is SPMO, which has pretty much been sideways and stable, but I am still working on building up a pretty large position into it because I wanted some additional growth when it comes to my long-term portfolio. And it definitely has been proving itself. The rebalancing is coming up, so I'll probably be putting, the one, just the one. Thank you. I probably will be giving an update because a lot of funds are going to be rebalancing and doing updates coming up soon, SPMO as well as the S&P 500. So be on the lookout for that. All right, so yeah, guys, check out my latest video. Let me know your thoughts. Be sure to comment. And Brown, you're asking, is the Discord worth it? That's your personal preference. I do have my link for the Discord available. I would say I've made videos about it. I've given my insights, but the choice is yours. If you want to support the channel, please use my link if you do plan on joining and giving it a try. And I am a crown trader over in the Discord, so you definitely will have more access to additional live streams and questions just at me at any time. Anyone that is in here that is a member of the Discord can always do that. But it's a great place, a great community if you want to expand into other things like options trading and things like that. All right, so I'm not seeing any more questions or comments. Make sure to leave me any thoughts that you have. You can always comment after the live is done if there's anything that I missed or you want to see, or you want to give, any feedback on Sunday lives in the future. So I hope that you were able to take away that you don't need to ever be putting yourself in a position where your investment is going to take on a total loss. That is not the type of investment journey that I want you to be on. Remember, investing is different than trading. You don't need to gamble in order to grow. And I think these are the type of things that I try to highlight and share with you through my different positions in my portfolio that I give full transparency on in my portfolio. And so you need discipline, you need consistency, you need a plan, you need to know how to ask the right questions. These investments, a lot of these ETFs, they're designed to grow. Like I just mentioned, they are going to kick out the losers. They're going to rebalance for you. They are going to change over time. And you can definitely do your research on that too, of how long these different funds have been around. There's lots of different ways to look at it to know what is the right fit for you. But I want you to have a mindset of this is the long game. There may be times of recovery, but don't put yourself in the position of having total losses or, drastic pullbacks, say down 80, 90% in your portfolio. There are ways to mitigate those risks. It's just a matter of taking on the responsibility of using the stop loss and doing those type of things in order to protect your money. Our goal is to make money here, not lose. So I'm going to gift memberships, and then I'm going to be wrapping it up for today. So just hang tight. If you are still in the chat for one more second, and guys, you have to have that feature turned on in your settings of being able to receive gifted memberships. So if you don't have that on and want to be eligible, make sure you turn that on, because I do gift memberships from time to time. So I'm going to just turn off my camera for a second because I'm going to jump around to just go and find that on another tab. Okay, and guys, again, thank you guys for tuning in. I hope you have a great week ahead. Please check out my latest video. If you haven't already, give the live a thumbs up. Mhm. Okay, investing with Rod, Cruz, Convo, Roberts, Rose de Grazia, love our toy pups. Congrats, congrats, congrats. Make sure to reach out. You guys are free to put in your request for any members only live streams or, priority on your questions. Let's see. Okay. And before I wrap up, again, thank you to Joe and Vincent, Purple Rain, everyone that gave super chats and have been long-term channel members and always huge supporters over here. So I'm going to wrap it up. It was kind of a long one today, but thanks for hanging in there. And make sure to tune in next Sunday. And like I said, I will be live midday for a lunch time Finance Friday on this week, Friday, 12:15 p.m. Eastern Standard Time. But the next lives are already set up, so you can go hit that notification bell so that you can make sure that you will get an alert. If you're not already subscribed to the channel, if you're interested in opening a new account, I do have a link for the MooMoo investing app, and that is one where I do one of my taxable accounts at, where I have a majority of my dividend focused investments. And that's also where I'm building up my position into AMD and Microsoft. So those are outside of my retirement accounts. I want to have some flexibility when it comes to my investing. And so if there is somewhere I need to tap into, it'll be an account like that. Never my retirement accounts that are designated for 59 and a half. And also, I do have an affiliate link for Keenan Grace's Discord. So check it out. Become a channel member. You can support in that way also. But you can also support just watching, tuning in, hitting that like button, commenting, hyping, doing all of those things on a regular basis when you see my videos, shorts, live streams. And so, guys, thanks for tuning in. I appreciate you all, and I will see you next week. Well, I will see you later this week because I will be live again. And that's it.
Thank you so much. We do greatly appreciate it.
Go learn about stocks. Let's go.